Hello and welcome to the Seedstars Portfolio Showcase. I'm Charlie Graham Brown. I'm one of the partners and Chief Investment Officer at Seedstars. Now, getting on a plane hasn't been easy these last 2 years, but as usual, Seedstars is here to help you travel the global south and take a look at some of the top early stage tech companies in our portfolio. We're calling this a portfolio showcase rather than a demo day, as it's just that. You're going to meet a selection of companies that we've backed over the last 2 years who are actively raising and all on stellar growth trajectories. Seedstars has been on a mission to support emerging market tech ecosystems since 2013, and we've got two pillars. The first pillar focuses on human capital. We work with organizations all around the world to develop and implement programs that encourages and educates entrepreneurs. Be it an incubation program in Nigeria, an accelerator in Bangladesh, or a market expansion program in Colombia, we're there. The second pillar focuses on financial capital. Since 2017, we've invested in over 80 companies in more than 30 countries, and we intend to invest in over 100 companies in the next couple of years. Each of the companies presenting today is part of our fund called Seedstars International Ventures. This fund invests in pre-seed and seed stage companies ready to double down on growth. Beyond the capital that we provide and our unique emerging market focus, our key value proposition is to help portfolio companies implement a growth team and a growth methodology. We think that growth is a fairly rare skill set. But if we can help companies get that right, capital and talent will follow close behind. John Atwell, who's going to be your MC today, is our resident growth expert and instrumental in transferring this growth knowledge to our portfolio companies. And I hope that some of John's growth tips are going to shine through in the pitches today. Thanks to everyone for being here. Enjoy the event, and I'm going to hand over to our MC, John, to walk you through the pitches and handle the Q&A.
Best I hit the unmute button. Thanks for the intro, Charlie. Much appreciated. There's certainly a lot to live up to, but I think it'll be outshone by the startups we have on display today. It's really such a pleasure to have them in the house today. And bear with me as I take you through the program up ahead. I'm going to give you some details about what's in store. First, as Charlie mentioned, the startups here today are both graduates of the Seedstars growth track that's been going on since January. It's a fairly lengthy track where we go through a series of webinars and peer groups and one-on-one mentoring sessions to help trigger an inflection point in these businesses. In addition to the startups that have recently participated in the Seedstars growth track, we also have startups in the Seedstars portfolio that are looking to unlock that next level of growth. In addition to that, we also welcome some startups from the Financial Times Sustainable Development Goals competition, the winners thereof, and that also participated in the Seedstars growth track. For more details on all these startups, their pitches, their pitch decks, and some videos, you can browse, of course, in the Stonks website to your heart's content, and make sure to hit that intro button in the top right-hand side if you'd like to strike up a conversation with them. So, very warm welcome to those joining us today. We had a lot of registrations today. I'm very excited to present what's in store. So the general agenda today is we're going to be going startup by startup. We'll show you a brief video of who they are and their backgrounds, and we'll have time just for a few minutes of Q&A with them. I have some questions prepared, so we'll hopefully get to learn a little bit more about what's there. Cool. Well, without further ado, I'm going to jump into our first startup and go right ahead. So. First up, we have Jia Technologies out of Pakistan. Now, Jia Technologies is a B2B AgriTech supply chain and FinTech startup that connects farmers and businesses through a lean supply chain model. Hear more about their three-sided model in this next video pitch.
Hello everybody, my name is Bilal and I'm a co-founder of Jia Technologies. We are Pakistan's fastest growing agri supply chain and fintech startup. Similar to other emerging markets, agriculture supply chain in Pakistan is highly unstructured, inefficient, and is dominated by multiple layers of middlemen. The problem GA is solving is that between the farmer and the retailer, we have up to 5 middlemen who extract up to 50% of the value by exploiting information asymmetries, price manipulations, and lack of farmers' access to the retail market. Further, due to multiple stops between the trading points, the produce would lose at least 25% of its shelf life only in the transportation and logistical inefficiencies. The problem does not stop here. The middlemen in the supply chain are also engaged in predatory lending, and they would often enforce very unfair conditions to the farmers, such as forcing the farmer to sell their produce back to the same middleman who has provided them with the loan. While on the retailer side, the problem is a very tedious and a cumbersome procurement process. The retailer has to wake up at 3 a.m. in the morning, go to the conventional marketplace, procure from different brokers, and then rent a local vehicle or a cargo van to bring the produce back to the retail point. The process would not only cost them 1,400 hours a year, but it would also cost them at least 10% additional in terms of supply chain and logistical costs. So GA's solution to this problem is to aggregate the supply from farmers across Pakistan and provide a doorstep delivery to retailers through a digital platform and a very lean supply chain model. Our platform provides ease of access, convenience, and transparency that translates into better economic value and less wastages for farmers and retailers. We are also the very first agri-fintech startup in Pakistan. And our platform provides quick, hassle-free, and a neutral working capital to farmers and retailers. The product features a fixed service fee, no compounding, flexible terms, and a very rapid processing system. GA is operating in one of the largest industries of the country. Agriculture contributes to about 20% to the GDP, and the agri supply chain and fintech industry is estimated to be about $80 billion worth in Pakistan. We employ over 70% of the workforce, and we spend about 40% of our all disposable income on food. GA is operating into an industry that has been significantly de-risked in other emerging markets like India, Indonesia, and Kenya, and we have seen top global VCs investing over $2 billion into the model globally. GA has also seen tremendous traction, and our GMV has grown by 176x July 2021 to March 2022. We have also served more than 100,000 orders to more than 14,000 customers. Well, that concludes my presentation. Thank you very much for the audience. We look forward to join you in our journey to impact more than 150 million people that are connected to agriculture in Pakistan. Thank you very much.
Hey, John.
Hey, Ahmed. Great presentation, by the way. Love the animated bits and pieces in there. That's a really super job you've done there. But more to the point, Ahmed, I'm going to pretend I don't know any of the exciting behind the scenes stuff that's going on in GIA right now. And I'm going to ask the question of, what are your goals with this next fundraise? Seems we may be experiencing some technical issues, such as the way of the internet. Let's give Ahmed just a moment. In the meantime, while we wait for Ahmed, just want to say thank you very much for all the warm greetings in the chat. I see people from South Africa there at my home. Thank you very much. Some from Bangkok, from Switzerland, from Washington, and from Istanbul. Thank you so much for tuning in today. We've got quite a few people in view today. I think we're going to have to move on to the next startup. Hopefully we can get Ahmed later for a little Q&A. So I'm going to move on to our next exciting startup. This time moving over to Rwanda. I wanted to introduce you to the company called Eden Care. Now, Eden Care designs, underwrites, distributes, and manages group health insurance plans in Africa. Now, somewhat familiar with this, with the challenges of health insurance in this part of the world. I think we've got a lot to hear from about this novel business model, and who they target customers and how they address their figurative pain points to relieve otherwise not so figurative pain points. Let's hear from Eden Care.
Hello, I'm Moses Mukundi.
86% of employers in Africa are rethinking their health plans. They are unhappy about the 200 emails it takes to manage a team of 50, or the 3 hours wait time at the hospital that is insurance related. This poor customer experience is reflective of a broken insurance model that is heavily reliant on brokers for distribution and manual processes for claims management, resulting in over 50% of your premiums being spent on admin costs rather than paying for members' health expenses. This insurance model is not well suited for the next growth phase of Africa's insurance, one that is driven by SMEs and young urban middle-class families. Africa needs a new health insurance model. Enter Eden Care. Eden Care is a digital health insurance for employers that provides best-in-class health insurance, a delightful digital customer experience, and makes heavy investment in wellness and prevention for our members. We've reimagined health insurance as an end-to-end digital delightful customer experience, one that distributes customized products directly to the buyers, and for the first time connects the three main repositories of health insurance data, that is the employer, the member, and the providers. This efficient insurance model frees up 50% more premiums for investing in our members' health. For HR managers, we provide them with an easy-to-use HR dashboard that converts the 200 emails into simple clicks, and we also provide them with wellness toolkits for them to build a healthy team. For our members, we provide them with a mobile app that enables them to easily navigate the healthcare system, find all the insurance information in one place, and encourage them to focus on their wellness and prevention activities by pairing wellness targets with reward points that they can redeem at a coffee shop, a movie theater, or a gym. Our model ceds majority of our risk to our insurance partner, freeing up our capital to invest in growth activities for the business. Rwanda is our launch market. We intend to expand across multiple countries in Africa, while also growing the portfolio of products that we offer to our members. We've made significant progress towards launch in Rwanda. Last week, the central bank granted us our health insurance license. We have over $840,000 of premiums under letters of intent, and we've signed our reinsurance treaty with the largest and third largest reinsurers in Africa. And we have an experienced team that brings the right mix of skill sets needed to execute our vision. We welcome you to join us in our journey to build a healthy and happy Africa. Thank you.
Moses, what a pleasure to have you here. Thank you for joining us.
Hey, John.
Moses, Eden Care passed a major regulatory milestone last week. Congratulations on that. What does that do for the business?
Yeah, thanks, John. Last week on Thursday, our health insurance license got approved. This is the first of a kind in the region, and it does two main things to the business. One, it unlocks the demand side for the business. We spent the last year putting together the supply side, and now with this license, we can go out and bring on board the customers to the platform. And number two, the regulators have been very closely watching the development with this license. It helps us with the expansion plan to these next countries, having seen the impact that we're having in Rwanda.
Super. And if I may, I'd like to follow up with a question. It looks like you have several potential clients lined up already. What's been the major hook for them? What's been getting them really excited about digital healthcare?
Yeah, for a lot of HR personnel, there are two main things that they've been struggling with. A lot of admin work, as you saw at the beginning of our presentation. It takes on average 200 emails to just manage 50 people. Once you cross 75 people, you need an extra person to help out. And then the other thing is post-COVID, there's been a lot of focus on wellness. And that's a key pillar of what we're building that wellness component that helps the HR manager invest that wellness dollar, the wellness budget efficiently, while also helping their members get healthy.
Awesome. Awesome. Super. And folks, just a reminder to everybody watching, if you want to get an introduction to Moses and this Avengers-like crew he's assembled for the task of taking on health insurance in Africa, then be sure to check out the page, click the intro button. There's a whole bunch on there. There's FAQs in there. There's an intro in there. There's a lot more detail about InCare and the other startups in the mix. Thank you so much for joining us, Moses. Much appreciated.
Thank you, John.
Good stuff. Next up, we're going to go back on the continent towards the east, and we're going to go talk to Aware. Based in Pakistan, Aware is a supply chain tech startup that really helps businesses with on-demand warehousing, intelligent distribution, and fulfillment with better transparency, flexibility, and minimum capital costs. And they're off to quite the start, and we're going to see exactly why in this video.
Hi, I'm Adil, co-founder at Aware. We are on a mission to enable thousands of brands to grow through flexible warehousing and intelligent distribution. In Pakistan, traditional warehousing and logistics operations are full of inefficiencies. Lack of warehousing flexibility and visibility into operations contribute up to $5 billion in losses due to overstock or lost sales. This is primarily because of inflexible business models, limited technology, and lack of distribution coverage. Our solution is to create a connected world of distribution enabled by a powerful software for warehousing and distribution using the power of the cloud. We do this by creating a network of fulfillment centers and third-party logistics service providers that provide real-time visibility, scalability, efficiency, and convenience for businesses to scale, optimize, and manage their supply chain in a hassle-free way with better flexibility, transparency, and also with minimal capital costs. Through our connected fulfillment centers and third-party logistic providers, company can quickly start operations from one or more locations to reach more customers. They are also unhindered by operationally intense and complex logistics planning and capital investment restricting business growth. Our integrated software offers real-time visibility on stock levels and order statuses with a single point of view across the entire network, where customers can make real-time decisions leading to a well-planned supply chain network that leads to best results. Our customer platform is able to provide real-time visibility of the network with inventory updates at multiple locations, order statuses, so our users can make decisions in real time in a hassle-free manner. Forget spreadsheets. Businesses can get real-time analytics and suggestions on SLAs and monitor their entire supply chain from our platform. Our centralized command and operation centers manages all operations across all warehouses. This helps us in monitoring live operations, issue resolution, and monitor all trucks with the exact products they are moving. Then we have a delivery agent app that syncs order information in real time and also updates the customer about the operation being carried out through our delivery agents with status tracking, product tracking, and also cash collection. Pakistan's logistic industry represents a $35 billion market opportunity and provides approximately 6% of total employment. This is a total white space at the moment as no company is specializing in B2B warehousing plus distribution with tech enablement. With the rise in the number of SMBs, we aim to build a world-class logistics platform that enables these companies to grow. At the same time, we have seen major acquisitions happening globally in the industry, with Agility being acquired for $4 billion by DSP and LF Logistics being acquired by Maersk for about $4.5 billion. We have a highly experienced team with all experience in B2B verticals, building out products and services for one of the top companies. Raza is the ex-CFO from Maersk, and I come from a background from Careem, where I exclusively worked in setting up the Careem for Business vertical in Pakistan. We closed March at an annualized revenue of about $3.1 million with a monthly recurring revenue of $262,000. Our sales pipeline looks strong, and we are on our way to achieve $305,000 by April, and also look to close June by $500,000. We are working with a healthy mix of startups, manufacturers, distributors, and retailers that are using our services to store and distribute goods with flexibility and minimal capital costs. We have raised a total of $3.3 million in the past. The round was backed by Silicon Valley investors, including Flexport, Ratio Ventures, along with global investors, including Seedstars International, the Osiris Group, Swiss Founders Fund, Reflect Ventures, and a host of other strategic angel investors. We are currently raising our seed round, and our ask is for $5 million to expand operations to service more customers, build out product, and attract quality talent that drives results. Thank you.
Awesome. Adil, thank you so much for that presentation. Really, really great to hear of your success today. And I can speak for OA, say that you guys did phenomenally well in the Seedstars growth track and saw some impressive growth during that time. So really hats off to you and your team for what you've managed to accomplish today. Of course, in the same breath, I must mention the massive 3.3 million round that you've raised recently. That was no small feat. So congratulations. Yeah, it sounds like Adil, you might be having some connection issues there, and may want to revisit that in just a second. Let's give it a minute or two, see if Adil will come back. In the meantime, folks, just wanted to pop you a reminder that as we go through these startups one by one, the page changes as well and gives you an opportunity to read more about Aware below on the Stonks website, of course. And there you can find out more about the business, the investors, all the FAQs associated with the business. And of course, click that all important intro button if you'd like to talk to Aware or any other startup for that matter. Looks like we'll come back to Adil in a little bit and revisit that. In the meantime, we're going to continue and hop onto the next startup. So next up, we're going to be talking about Indonesia for a second, specifically blue-collar workers in Indonesia. Now, MyRobin is a platform that provides Indonesian businesses with on-demand, pre-screened blue-collar workers. At the same time, they also provide a very easy-to-use online job portal, financial services, and trading, which boosts productivity and retention for blue-collar workers in jobs. We all know that that employment and unemployment, at least unemployment, is a rising issue in the world, and this MyRobin really tackles this directly by providing this platform. But I won't steal their thunder. Let's hear more from their video.
Hello, please meet Ahmad. He works in a warehouse in Jakarta. He's a high school graduate with no formal vocational training, always paid in cash, without any financial history. Now let us meet Arif, who's the head of a thriving e-commerce company that operates in 30 cities across Indonesia. Getting workers fast is Arif's #1 challenge. Hence, Arif has physically stationed HR in every city to acquire the couriers, warehouse workers locally. 90 HR people, a huge fixed cost for Arif. His team does manage to get a lot of CVs, but many of these are handwritten, extremely difficult to assess for skills required at work. And still, the monthly turnover is 20%, impacting Arif's customers directly. And in the new normal, companies do not want to hire staff full-time, they want flexibility. We built MyRobin to solve problems of workers like Ahmed and businessmen like that of Arif. We provide the necessary flexibility that businesses need with long-term and short-term workforce. Businesses only pay for the work done. They can hire at scale, be 10, 50, 500, or even more. We turn this around in 24 hours. We source workers from pre-vetted ready pool based on multiple criteria like education, work experience, and connect the very best with the enterprises. All payments go through our platform, enabling multiple opportunities. The platform removes the paperwork and administration of contract signing, timesheets, and payment processing. We don't just stop there. We embed financial services for people like Ahmed and his family and give him peace of mind. From early wage access to discounts on daily needs like milk powder, medicines for kids, and even vocational trainings. A user-friendly full-stack tech platform lets workers book their attendance, sign contracts, and track payments on the platform. Companies get a real-time visibility and optimize for manpower needs. We charge 8% management fee to the companies on total labor cost, and we get a referral fee on every single transaction of early wage access, microinsurance, and trainings. We are changing the lives of 70 million workers and their families in Indonesia and learning from successful precedents in India, Europe, and the US. My co-founder Adi Satria has built multiple platforms from 0 to 6-7 million users. I manage complex projects for multinational customers, regionally delivering cost savings of more than $10 million a year. We have 370,000 users on the app who we have acquired at a very low CAC. We have built a thriving community of job seekers on our social media of more than 2.6 million people, growing 70% year on year. We have proven our ability to increase the wallet share with clients like Shopee, Shipper, Lazada, Antaraja, and many, many more. We've grown by 10x in the last 12 months. Amidst COVID, when millions of people lost jobs, our workers made more than $5 million since January 2021. If you also feel passionate about what we are doing and would like to get in touch, here are my contact details. Thank you very much.
Sid, what a pleasure. How are you doing today?
Very good, John. Thanks. How are you?
Super, real good. And what a great presentation, might I say. I think you sum it up so well. And that growth you've seen recently, absolutely phenomenal stuff. What would you say is the recipe behind that sudden growth that you're seeing right now?
Sure. So we did not force a change in how these workers look for jobs. How do they look for jobs today? They look for jobs via friends on WhatsApp, on Telegram, on Facebook, on Instagram. So we followed them and we acquire workers from these channels and then bring them on our platform. So we're able to fulfill fast. We're not forcing a change. Our CACs are low and customers are happy.
Awesome. And I know that this is the gig economy in general is booming right now. Everybody, not only the employers, but the people themselves want a bit of flexibility in their lives, making it a very competitive market for anyone in your industry right now. What is the incentive for your workers that you managed to attract to the platform to stay with you and continue working for the companies you contract?
Sure. So apart from the benefits they get, I think the fundamental reason why the workers want to stay with MyRobin is the same reason why a driver drives for Uber. Because Uber brings them continuous passengers. So if this guy is on his own driving car, depending on WhatsApp, his friends booking cars, he will have breaks. Same for our worker. We remove those breaks if a client A needs them for 4 weeks. At the end of 4 weeks, we place them with client B, with client C, so on and so forth. So there's continuity in their income and there are no breaks. So there's a fundamental problem we are solving for them, which is making them earn more money.
That's super. And this is all facilitated in the platform itself, and they get alerts for new jobs. And how does that system work?
Yeah, exactly. So, but once they are placed with a client, we track the daily attendance, and once the period of that employment is coming to an end, we tell them, hey, starting next week, there's this job available. Do you want to pick it up? More often than not, workers just pick it up.
Right. And something I noticed during your participation in the growth track not so long ago was how you were optimizing the way that you onboard your workers, making it super simple and seamless, not requiring any onerous uploading of documents and things. You made it really, really simple for them to sign up. Would you say that was a key part in attracting a lot of people to MyRobin?
I would say that is a key part. And I go back to the first point. I think at step one, we were trying to change the worker behavior, do everything on the app. Then we started following them on WhatsApp APIs, Telegram APIs. So they can actually build a profile via these apps on our app itself. So we didn't force a change, and removing that friction did play a key part in onboarding more and more workers.
Right.
So thanks for that,
Super.
John.
Yeah, no worries. And thank you so much for the presentation today and tuning in. Reminder to folks, if you want to read more about MyRobin, just scroll down on the page. They've got quite a few investors listed up there, so you got to scroll a little bit further down to get a bit more information about MyRobin. But there's some great FAQs they prepared there and a great little little brief description of what MyRobin all involved and what they do for both the companies that they contract and the workers that they serve. And remember to hit the all-important intro button if you'd like to speak to Sid. He's a really friendly guy, so I highly encourage you to do that. Thank you for joining us, Sid.
Thank you.
You're welcome. Super. Now, moving far more westwards to both Argentina and Mexico, I'm going to introduce you to a company that's been with Seedstars for some time called Siembro. Now, Siembro is a B2B2C machinery FinTech financing in Latin America. That's essentially what they do. Now, it's a little bit complex, but essentially they serve the agriculture business. And Siembro are using modern ways to leapfrog over dated methods of financing machinery like tractors and agriculture drones and things associated with providing the world with food. So now we're going to hear a little bit more from Siembro and what their business model is all about.
Hello. For more than 15 years, I work in the family business of farm equipment and technology for agriculture. And do you know what impacted me the most? The lack of available financing that farmers face to invest in ag machinery and other technologies to boost production. I learned myself that farming is evolving rapidly, but financing for farmers is stuck in the 15th century. This lack of evolution impacts ag finance, making it really slow and painful all across Latam. To solve that problem, we created Siembro, a digital lending as a service platform focused on agricultural loans. Through our own technology, we optimize the financing of the agribusiness value chain by connecting farmers with bank and other credit providers directly at the point of sales. Our application converts a smartphone or PC into a terminal to access loans. These loans are funded from banks, partners who use our technology-enabled infrastructure to reach farmers digitally and in real time. Siembro reaches the market through point-of-sale lending. We leverage the farm equipment dealers' extended network to reach farmers from all rural areas, enabling a B2B2C business model. Our dealer partners use Siembro's application as a tool to improve sales and engage farmers in a different way. As 90% of any merchant sales are typically on credit, they are usually very interested in our service. Ag machinery and high-tech equipment is our sweet spot right now because it combines asset-backed loans, high profits, and low delinquency ratios. But we expect to develop other verticals such as ag inputs or irrigation gradually. With a proprietary combination of features, our platform enhances credit origination at the point of sale, as ag suppliers can take advantage of our Expedia for ag lending. They can present multiple pre-approved loan offers to their customers in real time. The market we are addressing is enormous, and considering the most important markets of the region, we are valuing the business opportunity at more than $100 billion. We have had robust traction so far and originated more than $20 million in loans through our network of more than 100 active merchants in Mexico and Argentina. And we also managed to have a consistent growth from inception. We focus on creating a profitable business from the beginning with good multiples and gross margin that has allowed us to have almost 3 consecutive years of positive cash flow in Argentina. We have an experienced and balanced managed team combining experience in farm equipment sales, technology, and agricultural machinery financing. In the last few weeks, we reached critical milestones that unlock the opportunity of quick growth in Mexico. And that is why we are raising a pre-series A round of $2 million in convertible notes, of which we have already 50% of the fund self-committed with US-based VC funds. Thank you very much.
Nico, thank you so much for joining us. How are you doing today?
Very well. Thank you, all of you. A pleasure to be here sharing our endeavor with you.
Yeah, it's our pleasure just the same. And I wanted to say that, Siembro has done an excellent job at providing access to efficient financing to Argentinian and Mexican farmers over the last little while. What got you started off with financing agriculture machinery, and what segments are you looking at next?
Okay, yes. Well, our vision is to be the typical tool farmers can use at the point of sale to connect with the financing they need to invest in innovation. So we started in ag machinery and farm equipment because it's a sweet spot. We knew very well the market, but right now, for instance, in Argentina, we are launching an agreement to enter the ag input space, which is meaning seeds, fertilizers, and other technologies the farmers are using, for production too. And in Mexico, we are now entering the high technology space, which means drones and other high technology equipment, which is really boosting production and raising efficiency for farmers in Mexico. So we're very excited because our vision is, going to different verticals and allowing farmers to really find the financing they need at the point of sale at the different things they need to produce.
That makes a lot of sense. Serving farmers at the point of sale, because that's usually the moment where they most need the goods, right? Is the moment where they go to the store and they're like, I want it here now. But I understand before you came along, there were a lot of challenges with that. So in that regard, agriculture is generally a government subsidized or incentivized industry. Where do the current institutions fail, and how are you helping them?
Well, actually, it's a very good question because we have found that financing for farmers, it has a lot of frictions, but one of them is distribution. Because, typically bank branches and the typical distribution systems are more connected with big cities, and farmers are in rural areas, actually, right? So that's why we are helping financial institutions and also federal government funding that is really trying to make an impact in how farmers find the financing, because it has a lot of social impact in the rural areas. So our technology is helping this financing to go directly to the farmers in a very frictionless process, and we convert the capillarity of the different branches of ag inputs supply chain, ag machinery supply chains, where are plenty of point of sales in rural areas precisely. So we convert these specific point of sales into a credit branches so that farmers really can go very close to where they live and find the right financing so they can invest and boost production and help us produce, the food we need for the future, right?
Yeah, making it so much more convenient for farmers. Convenient, and of course with convenience comes efficiency gain. So I think you're really having a remarkable impact there. And I know that you've been working on this business model for a while. You went through a fairly big change in 2017 where you decided to go down this path. And I think Siembra has a great story. But I'm not going to steal your thunder. I think if you want to get in touch with Nico, be sure to hit that intro button and read more about Siembra below here. Really exciting business, folks. So definitely tune in for that. Thank you, Nico.
Okay, thank you very much. I'm happy to receive any further questions and to connect. Thank you.
Thanks. Super. So next up, we're going to come back to Ahmed from Gia Technologies. We spoke about them a little bit earlier. Very exciting business, also in the agricultural space, trying to gain some efficiencies there and work on logistics in agriculture. Are we able to bring Ahmed in? Testing 1, 2, 3. We may be having some connection issues between stocks and Pakistan right now. I know Pakistan are going through a public holiday. Eid Mubarak for those celebrating today. Thank you for joining us on this special day. I know similarly in Kenya, it's also a public holiday. So maybe these things are messing with the connections today. But be sure to head on over to Gia Technologies page and hit the intro button for a direct conversation with Ahmed and the rest of the team. They have a lot to offer, and I'm really excited about getting you in touch with them. Regrettably, that's not going to happen right now. So without further ado, we're going to go on to one of our last startups that we're going to talk about today, Lipaleda. Now, Lipa Later is based in Kenya, a buy now, pay later solution. But it is often the case that, in developed markets, we take access to credit for granted. And Lipa Later is changing this for Kenyans every day, where they provide kind of a risk-free point-of-sale credit option that allows retailers to sell goods to consumers with repayments made in affordable monthly statements. They have a really great team behind this, worked with them closely over the last 13 weeks through the Seedstars growth track, and I'm excited to show you a little bit more about who Lipa Later are. Stay tuned for the next video.
Meet Kamau. Kamau lives in Nairobi, Kenya's capital city. Kamau has a family of 6. He has a wife and he has 4 children. Kamau is a middle-class Kenyan and a civil servant. He's also the breadwinner and he pays school fees for all of his children. Now his oldest daughter, Lisa, is finally joining the university and she now urgently needs a laptop. The average cost of a relatively good laptop is about $400. With his tight finances, Kamau simply cannot afford to pay for his laptop upfront. And without the laptop, Lisa will miss her first semester and hence her school year. This is where Lipa Later comes in. Lipa Later is a buy now, pay later solution that allows consumers to buy goods and services and pay in flexible monthly installments. With Lipa Later, Kamau will be able to purchase a laptop today and pay for it over 12 months. His monthly installment will be approximately $50 per month. A $50 per month payment significantly reduces the financial burden on Kamau and his entire family. And this is exactly how Lipa Later actually works. Our lending process is fast, easy, and it works in 3 easy steps. Kamau can pay a visit to any one of Lipa Later's merchant stores, either online or offline. What you're seeing here is the online purchasing process from the Lipa Later marketplace, where customers can choose products from a variety of merchants. Here, Kamau is spoiled for choice and chooses the laptop he wants from a variety of options available. At checkout, he chooses Lipa Later as his preferred payment option, and this will allow him to get the laptop today and pay for it later. He goes through a credit verification process, which scores him, and he gets an instant credit limit. He's then able to complete the transaction and have the item delivered directly to his doorstep. Kamau and Lisa happily get the laptop, and Kamau in flexible monthly installments. Kamau and Lisa will happily get the laptop, and Kamau will be able to pay for it in flexible monthly installments. Lisa will realize her dreams of joining the university, and Kamau's finances will not be unnecessarily strained. On the other hand, merchants also benefit from our buy now, pay later offering, and on average, increase sales by approximately 30%. Now, here's what makes Lipa Later stands out. We finance a wide range of merchants, ranging from device financing to fashion to automobile accessories. Our wide merchant categories allow us to offer an incredible variety to our customers and sets us aside from our competition. In addition to this, the fact that we're operating in multiple jurisdictions significantly distinguishes us from our competitors, as these are all single market players. We also have a superior tech stack. Our superior tech stack allows us to be the first of its kind platform on the African continent that seamlessly integrates into merchants, both online and offline. We offer instant credit limits to customers and instant payments to merchants. We do this all while maintaining a default rate of approximately 5%. Our interest rates are also the most competitive in the market, with our pricing ranging from 0% up to about 4%. Our installment plans are the most flexible installment plan in the market, ranging from as short as 3 months to as long as 12 months. And this allows our customers to pay for items in the most flexible way possible there is in the market. We have the ability to establish in new markets very fast. We've been able to penetrate in new markets such as Uganda, Rwanda, and Nigeria, which in total have a population of close to 521 million people. And we've done this all ahead of big competition. We've done this with an incredible team. Our team is led by myself and my co-founder, Michael. As a serial entrepreneur, I've had the pleasure of being featured on the Forbes 30 Under 30 list for the work we're doing here at Lipa Later. Michael, my co-founder, has a background in finance and legal expertise and is a fellow at the Alibaba eFounders Program, a program for high-performing entrepreneurs from Africa, selected to work closely with Alibaba Holdings on their Pan-African businesses. Our venture is featured by the London Stock Exchange Group as one of the companies to inspire Africa, as well as on Business Insider. Our management team collectively has brought in some of the world's leading retailers to enthusiastically work with us. As part of this round of funding, we are on track to onboard a superstar team that will build Lippalater into the unicorn that it is.
Super, and that was from Lippalater. They won't be joining us today, unfortunately, because Eric is traveling right now. But nevertheless, I hope you enjoyed that extra special long pitch from Lippalater and the business. Remember, if you want to get in touch with Lippalater, just hit the intro button in the top right corner of the Stocks page, and of course, read more about Lippalater further down the page as you wish. Now, we're going to head towards wrap up. Regrettably, we can't reconnect with Aware or Gia Technologies, but that's all the more reason to hit the intro button on those two pages. These are two very exciting businesses out of Pakistan who did exceptionally well during the growth track and are about to hit a growth inflection point. And now's a good time to strike up a conversation with them. Some startups we haven't yet dived in too much detail with, but are worth looking at are, of course, once again, the Financial Times SDG startup winners from the Financial Times competition. I'll list them quickly. Medal, out of the Caribbean, they provide an end-to-end platform that connects doctors and patients so that they can get their pharmacy to dispense and deliver their goods in the Caribbean. So super noble business there, doing good work. Of course, one of my favorites, Pinky Promise out of India. Pinky Promise is automating reproductive healthcare by providing women with instant diagnosis, automated prescription, pathology tests, community support through their proprietary chatbot and issue-specific chat rooms. But really what stands out for me about Pinky Promise at first glance is their amazing website and UX. It's really a phenomenal business worth checking out. Love Pinky Promise and the work that Divya is doing over there. Dukkha is another startup in the mix, a B2B and supply chain and distribution technology platform, not unlike the likes of Aware and Gia, but this time based in Nairobi. And so have a look at Dukkha's page and get in touch if you're interested. Last but not least, I want to mention Safe Earth as well. Safe Earth is a platform that helps you invest in and manage solar projects around the world. And it's almost like, think of it like a solar marketplace, if you will. But to give you the official pitch, it's an online platform that makes buying and operating solar as easy as possible. They bring all the stakeholders onto one common platform to increase transparency and trust. So definitely check out Safe Earth and the platform that they're building there. It's a really exciting business. Once again, just want to say a big thank you to all the startups that contributed today, but preparing videos, being ready for questions, and being available for introductions. To recap, once again, we heard from Gia Technologies, we heard from Eden Care, we heard from Aware, we heard from MyRobin, Siembro, and Lippalater. And to close it out, I just want to mention that these pages will be available on Stonks for the next 7 days. So if you want to come back and revisit it, or if you want to link it to somebody else, just be aware it's going to be available for 7 days, and you can get in touch directly through Stonks that way. Alternatively, you can always reach out to Seedstars directly, and we'll put you in touch with these remarkable entrepreneurs doing good work in developing nations. And with that, I'm going to close out and just say another big thank you to all our participants today. And I hope I haven't missed anything, but I think that should wrap it up today. Thank you so much for joining us, and I look forward to our next showcase on stocks. Have a good day.